Welcome to another exciting episode of The Trading Bell. Today on the program, we're delighted to host the Vice Chairperson of the Nairobi Securities Exchange, and that is Mr. Paul Mwai, who doubles up as the CEO for AIB-AXYS. He'll be talking to us about the performance of the stock market and his view on the capital markets and how we can deepen financial inclusion in the country. Before we get into that discussion, let's take a look at his profile.
Paul Mwai is the board director of the NSE and is currently serving as the vice chairman. He is the chief executive of AIB Capital and the chairman of the Kenya Association of Stockbrokers and Investment Banks, KASIB. He has over 20 years' experience in the financial services industry, including fund management and investment banking. He has worked in various departments within the Barclays Group and has served as a senior portfolio manager at Old Mutual Asset Managers as an asset allocation strategist. He joined AIB Capital in February 2012 from African Alliance Investment Bank, where he was chief executive. Paul Mwai holds an MBA from Strathmore University and a Bachelor's of Business from the University of Southern Queensland.
Thank you so much, Mr. Mwai, for joining us on the show.
Thank you for having me.
And definitely a lot happening in the economy from what we're seeing, fuel prices going up. The stock markets are also tinkering a bit, linked to, of course, global dynamics. And generally speaking, what is the state of the economy and how are we looking like before the investor community?
All right, thank you. I think the economy is at a point where there is some level of optimism that we are moving to a post-COVID era in as far as growth is concerned. I think we saw the very disappointing growth numbers from 2020, and there are reasonable projections of a significant rebound during this current year. Mm-hmm. And indeed, when we look at the signs, for example, from the stock market being one of the leading indicators, we are seeing very strong performance from some of the shares in the stock market, Safaricom, Equity Bank, KCB, and very good announcements coming from the banking sector. And there is some level of optimism that, yes, we are turning the corner. I think the concern in as far as the economy is concerned is obviously the threat of inflation. Particularly because, and this is not just a Kenyan phenomenon, around the world during the COVID era,
yes,
governments put in place a very expansionary monetary policy so as to keep things ticking forward in that environment. The concern then is whether that expansionary monetary policy will lead to inflation, and at what time does the central banks around the world then begin to pull back on the expansionary monetary policy so as to avoid the situation where we have inflation. So that's one of the concern. Obviously for Kenya, the bigger concern is obviously our debt levels, which obviously has been quite topical. And also the implications of our debt levels on us, mm-hmm. because actually what we are seeing in terms of fuel prices and higher taxations is a manifestation of an obligation that we now have to pay. And the government's source of paying off its debt is from increasing taxes. So inevitably we might expect that the future going forward is going to be quite punitive in as far as tax measures are concerned. Mm-hmm. Until we get to a point where we have a manageable debt level.
All right. Mm-hmm. Very telling signs, like you said it, Mr. Mwai. And this takes me to the next question. Are our economic fundamentals in check? And what do we need to do to reverse this? Because we are looking at a time and place where Kenyans are already overburdened by overtaxation. The disposable incomes are likely to be eroded. And this has a big impact on the ability of Kenyans to invest in things like stock markets, investing in agribusiness. I mean, the entire investment portfolio offerings available.
Okay. Yeah, so I think, our economy is in a bit of a tricky situation.
Yes.
Obviously, inflation has been quite tame over the last few years, which is a good thing. And tame inflation creates a good environment. One of our concerns, and again, which also is a further manifestation of our high debt levels, is that our interest rates, if you look at the government issuing treasury bonds at 12 to 13%, which is almost 6 or 7% above inflation, that actually means that our risk-free rate is significantly above inflation. I think that is an abnormality, which means that there is effectively very little incentive for investors to take risk. And you will find that then there is a concentration of money going into into government paper and effectively crowding out the growth that should be driven by the private sector.
Correct.
So there is a need to change that, so that private sector then becomes the engine of growth. And I think the growth we've seen over the last few years has really been driven by government infrastructure projects and government-related whatever. For real growth to happen, we really need the private sector to be real sustainable growth. We really need to be private sector to be the engine of growth in the economy.
Interesting point that you raise. And this, of course, opens up a bigger conversation as we look towards deepening financial sector investments. I'd like to hear your position on this, because you serve as a vice chair of NSE. Mm-hmm. And congratulations, by the way, on your election as vice chair. Yes. And the bigger conversation is, how is the NSE positioning itself towards being an investment hub for Kenyans?
Okay, thank you. So one of the critical things that we are doing as the NSE is applying technology to ensure that we facilitate for Kenyans to be able to tap into the stock market and invest in the stock market, and to be able to create wealth for themselves through the stock market. So quite a number of initiatives have been taken. We've had many of the providers, the brokers and the investment bank, developing apps and IT solutions that enable Kenyans to operate remotely from any part of the country. We now have investors tapping into the stock market from as far as Moyale, Garissa, Wajir, which, previously, for you to be able to get into any part of this country, you almost had to have an agent present in that part of the country, or that person needed to make a trip all the way to Nairobi or to the nearest place where there's an agent. And that model was effectively not favorable and almost quite expensive. So a lot has been done in terms of creating the technology platform to enable young Kenyans to get into the stock market. The challenge that we then now do find is that there's a really big gap in as far as investor education. So as we get into spread our wings across the country, we then now find young Kenyans who say, I really like the story about the stock market. I'd like to invest in the stock market, but I know very little about the stock market. So we have, and in collaboration with the Capital Markets Authority and the NSE, and also the Kenya Association of Stockbrokers, embarked on significant investor education initiatives, which we believe will create that awareness that will enable people then to begin to come and participate in the stock market in an effective way.
All right. And Mr. Mwai, as we consider deepening education and allowing Kenyans to invest in the stock markets, talk to us about the issue around the number of companies listed at the exchange. Mm-hmm. Considering Kenya is a fairly advanced market compared to our counterparts in East Africa, when you compare this or juxtapose this with other markets such as Johannesburg Stock Exchange, that is in South Africa, we still have some ground to cover in terms of boosting listings.
Yes.
And one of the biggest low-hanging fruit has been touted as government to accelerate the privatization program. What do you see in this, and how will it impact on the capital markets in the long term?
Yes. Yes, so one of our biggest disappointment as the Nairobi Securities Exchange has been that we haven't seen a privatization from government since Safaricom in 2008, which is almost 13 years ago. And we feel that it is important that government gives Kenyans an opportunity to invest in profitable companies. Not everybody will be an entrepreneur. Some of us will have to save and invest in the companies that the entrepreneurs are building. And therefore, government has a responsibility to give Kenyans that avenue of investing. So right. my big appeal is for Kenyan, for government, the parliamentarians, to look at their stock of good companies and look at identifying which ones are the ones that they should give Kenyans an opportunity to own, just like they gave us the opportunity on Safaricom in 2008. They gave us the opportunity in KCB in the early 80s and the early 90s. They gave us the opportunity in many other government-owned institutions, which have not only created employment, but have also created a significant pool of savings and investment for many Kenyan shareholders across the country.
Taking us back to our main conversation in regards to another big issue facing the capital markets right now. There's a lot of global uncertainty in different markets across the world. And of course, Kenya is interlinked with all these markets. I'd like to just get your quick thoughts around how are we looking like post-COVID season? We are seeing vaccination is currently underway in the country. We still have the containment measures in place, but give us your viewpoint, especially on the inherent risks we foresee and how severe will this be in the markets, considering Kenya is staring at another election cycle.
Okay, thank you. I think I saw earlier this year a headline from Reuters which said, I think the headline said, Asian stockbrokers overwhelmed by retail investors looking for post-COVID recovery. I think for me, that just brought tears to my eyes, and I'm saying to myself, why isn't that happening in Kenya? And that's the nature of the stock market. And when things are bad, they create opportunities for strong recoveries. And there's no doubt about it that across the world, we are seeing stock markets recovering as perhaps markets interpret that the severity of COVID, I'm not saying we'll get rid of COVID, but the severity of COVID in as far as its impact on the economy will begin to reduce going forward. And from that, we will begin to see a post-COVID recovery, which gives a great opportunity for people who have invested during the bad times to ride the wave of that recovery. So we are also seeing some of that in Kenya today. If you look at the share prices, what they've done so far this year, and I do expect that to continue. Yeah, you've also brought the question about going into the election last year. Interesting enough,
this year, yeah.
This
next one.
In the next 1 year.
Yeah.
That's always a concern in as far as how we handle the economy, how we handle our politics, and the end result of how the transition is handled is always a concern. But traditionally, we've had some of the best years in the stock market in the past during election years. If you look at 2002, it was actually when we began to see one of the strongest bull runs start around September of 2002. 2007 was also one of the best years in the stock market. 2013 similarly. 2017 to some extent we had some back and forth, but there has been that. So as much as it's a concern, I think it would be unfortunate that if as a nation every 5 years we have to slow down and pick up again. So I think there is more of a realization that, you know, investing is continuous and that we need to continue engaging, and we need to take advantage of the slowdowns in the market to build up our portfolios so that, you know, we are able to capitalize on the recoveries that come below that. So I remain optimistic that so long as we don't get into a situation where there is violence on the streets, we should continue to see the post-COVID recovery carry on into next year.
All right. Perfect place to end the conversation.
Thank you.
A lot still to discuss into the near term.
Thank you.
Well, we've been speaking there to Mr. Paul Mwai, who is the Vice Chair of the Nairobi Securities Exchange, giving his insights into how the markets are likely to perform, and he's quite optimistic that Kenya will weather the COVID pandemic storm as well as the upcoming elections that he holds. Investment is continuous. Well, we want to transition into our other segment, and this is, of course, talking to our analysts just to get a sense of how the markets have been performing, which stocks have done well, and which stocks haven't been performing pretty well in this week. We take that transition next. Well, it's that time of the day. We want to take a quick look at how the markets have been performing today. And we're joined by Solomon Karaoke, who is from AIB-AXYS Africa. Thank you for joining us.
Thank you, Abby, for hosting me today.
And a lot of activity in the stock markets. Of course, one of the major gainers today we are seeing is Nairobi Business Ventures, which is up by about 6 shillings. Actually, it's up by 9.18%. And of course, what could be behind this? I also see another big mover today is Standard Group as well as TPS East Africa, that is Serena.
Okay, thanks, Abby. So looking back at what is happening at the market recently, there's been some exciting news, and some of the people delivering this news include NBV, Nairobi Business Ventures. So you find that the company has been having some activity in terms of acquisitions. They recently announced that they are going to be acquiring around 4 companies in what we saw as a share swap between some of the top management who are the owners of these companies. So you find that they intend to enter into aviation and cement manufacturing. And we have observed that some of this news has excited some of the investors, and they are a little bit more positive. And actually, in fact, the stock itself has had an year-to-date performance of around 60% gain. So this has excited the investors, and they look forward to really looking into buying into it.
Talking about exciting news for the investors, there's some exciting news also on the hospitality sector. I'm seeing TPS East Africa is up by 6.67%. And remembering very well, Kenya has been receiving different vaccines across the few weeks, and there's some good news also coming out of the United Kingdom.
Okay, yeah. So recently, I think it was last week Friday, we had a tweet by Marriott, who is the High Commissioner for UK in Kenya, and we also got the confirmation later that Kenya has been removed from the red list in the UK. So that means that that would follow suit for other countries to do so. And from that now, we expect that you're going to be an inflow of tourists, foreign tourists, coming into the country. So we feel that such news have excited investors who are more positive about TPS performance. And we also expect that now the continued inoculation of the vaccine in Kenya and around the world will then attract or open up more traveling like we used to see before for tourists to come and see the country.
All right. Let's shift gears and look at the losers this week. We have Stanley Fahari down by just about a negative 100% change.
Okay.
We also see Unga Group is down 8.95%. A few other companies include Limuru Tea as well as Samia Africa, Can General. Talk to us about Unga Group. There has been a transition in the leadership.
Yes, we recently saw the communication, that the current CEO will be stepping down and they're going to have a new appointment. And we also saw some other news coming from the company, also see that they announced that they're going to be divesting some of their business ventures. That is NSE Bakery. It's their bakery business. And so for me, I would feel that as an investor, I would be excited by such news. But from what you are seeing right now, it's kind of investors are fearful. So maybe what I would advise investors is to keep an eye on that particular counter, because such moves would be particularly good, because we are going to see some inflows into the company. And also digging deeper into the food and food business, FMCG, you find that there has been recent news on cheap maize imports. And you also find that there has been news on wheat imports. So I would expect that such news would then bring down the operating expenses and the cost of goods sold for a company like Unga. So I would advise the investors not to panic on that particular counter and be positive on it, and just keep an eye on it.
All right. So some smoke screen to some extent.
Not some smoke screen, but maybe it's one of few investors who are worried. My first thought would be that maybe it's a portfolio manager who was running their portfolio, and so maybe that's what brought about the loss in that particular counter.
All right.
Yeah.
Last but not least, I'm seeing some movements on the Fahari IRITE, which is down by negative 100%. This is quite substantial, considering that the property market has been performing exceptionally better compared to last year. This year, there seems to be some rebounding on that front.
Yes, there is a bit more positivity on the real estate sector. But then again, if you have to look at the IRITE, then you have to go back to the particular investments that they have. Recently, they announced that they had parted ways with their biggest anchor tenant at their Greenspan Mall in Donholm.
Yeah.
That is, I think it was Tuskys. And there were talks to have another bigger retail chain coming on. So
Sure.
I think that particular news that maybe does not go well with investors, because at the end of the day, they are looking at dividend payouts. Because one of the reasons why investors prefer the rate market is because you are assured of a dividend payout at the end of the year. So news of having a reduced income then brings some jitters into investors, and they would be willing to dump the stock for the next opportunity. So we have to wait and see whether they're going to onboard a new tenant at the Greenspan Mall, so that at least we can make maybe a better judgment.
All right.
Yeah.
Many thanks there, Solomon Kariuki from AIB-AXYS Africa. He is from the research unit, just giving us some interesting insights into how the markets have formed, and of course, a lot to expect in the coming weeks. Well, that's why we wrap it up for this week's edition of the Trading Bell. On behalf of the entire team, keep it locked here on KT News, and remember to follow us and share your feedback on our social media handles appearing at the bottom end of the screen. Until next time, take care.